This is the first of 3 videos that look at financial accounting statements. The major financial accounting statements aim to provide a picture of the financial position and performance of a business. To achieve this, a business's accounting system will normally produce 3 financial statements on a regular, recurring basis. These 3 statements are the statement of cash flows, the income statement, also known as the profit and loss account, and the statement of financial position, also known as the balance sheet. The statement of financial position will tell us the accumulated wealth of the business at the end of the period. The accounting equation is a key driver in us being able to provide a statement of financial position. The accounting equation is made up of 3 elements: assets, liabilities, and equity. Assets should equal our liabilities plus our equity. So for example, if our assets were £100, our liabilities £80, our equity would be £20 for the formula to work. In our accounts worksheet, you'll see we have assets equals liabilities plus equity. And this accounts worksheet will be for Chain and Gear for the first month, April 2013. And the first thing that happens is we invest £20,000 into the business. The bank account cash increases by £20,000 and we have share capital of £20,000. You'll notice the accounting equation is balanced. Here we have assets of £20,000 and equity of £20,000. Next, we are going to set up a registered company, which will cost us £15. And we're going to record this as an expense in the period of April. We're going to register a domain for £30. Again, this is a cost or expense in the month of April. We also received some accountancy advice for £300. Again, this is paid for direct from the bank, and we record this as a cost in the month. Next, we're going to purchase some stock, and we're going to purchase the 2i bike helmet, which is payable in 30 days. So rather than pay for the stock from the bank account, we're going to put this under our creditors of £1,200, and we're going to increase our stock balance by £1,200. You'll notice at this point we haven't actually used any of the stock to supply our customers, and therefore there is no cost placed into the income statement for the period of April. All of the stock remains in stock at this point in time. Next, we're going to purchase a laptop for £700, and we're going to pay for this direct from our bank account, and we're going to increase our equipment by £700. Again, we haven't demonstrated a technique using depreciation to put a cost for this laptop in the month of April. We'll cover this in our later videos. And the assumption here is we purchased the laptop at the last day of the month. We're also going to receive some legal advice worth £400. This is a cost for the month of April. And we've actually received some stationery worth £37 in the month. And again, this will be a cost or expense in the month of April. And finally, we had our logo designed for £150. Again, this was paid for directly from the bank account and as a cost in the month. Now we have all of the transactions that have occurred for the month of April. The cumulative balances are what we use in our statement of financial position. So we're just going to highlight that area now in order to transfer the balances across to our statement of financial position. So here we can see they've got equipment of £700, stock or inventory of £1,200, cash of £18,368, creditors or payables of £1,200, share capital of £20,000, and a loss for April of £932. We now pick up those balances and transfer them to the statement of financial position. Our first item to record is under equipment for the month of April. So we have £700 of equipment under our non-current assets or fixed assets using the UK terminology. We also have stock of £1,200. We have cash of £18,368. So a total non-current assets, I should say, are £19,568. We also have creditors of £1,200. And as there are no long-term borrowings or non-current liabilities, you can see that our net assets are now £19,068. £19,068 is our total net assets. All of our assets less our liabilities come to £19,068, and this is represented by our share capital of £20,000 and our loss for the period of £932. Here you will see our equity equals our assets less our liabilities. So to summarize, to establish our financial position, we need our statement of financial position or balance sheet. We'll also look at the performance of a business using the income statement or profit and loss account. And finally, we'll look at the cash position using our statement of cash flows or the cash flow statement.